that has expanded the popular markets.
Has returned.
Just look at it. Yes, just I don't know what I've done, but I've clicked on something. Just check on my.
On your phone? On the phone? But
yeah, just
look.
A minute.
Okay.
Just.
But just click back that place.
Okay.
Yeah, just click back. Nitarudisha. Vile likuwa.
Okay, just a minute.
Ilikuwa imepotea.
Actually imepotea, sasa ime-expand. Ime-expand the popular markets. So
go back there and click on it again. Itaifunga.
Okay, let me try.
Bado umeshindwa?
Imagine imeshindwa.
Okay, what have you done?
I'm not sure, but maybe. Let me just look at my. Okay, just a minute. Can you see my screen?
No, that is just your face. I can only see your face.
Ah, sorry.
Okay. I can see.
Can you see my screen now?
Yes, I can. Okay, move your cursor to the left. So what you've done.
To the left.
Move the camera to the left. I think what you've done, you opened something which you're not supposed to. So what you should do is close them. Close them.
I close them.
Yes. Close. That window.
Okay, where do I close it from?
This is like what? There's always an X on the right, somewhere on the right. There's always an X somewhere on the right.
I'm not saying anything.
I'm saying, do you know that all Windows programs always have an X on the right?
Yes, I do, but I'm not seeing anything to do with the close.
Angalia juu.
Unless I log out and log in again.
No, angalia juu. Okay, on the right.
Okay.
Anything close?
Okay.
All the way up. Do you see any X?
Oh, there's a classic view now. I've seen it.
Yes.
Yes. Now I think it's okay.
That's good enough. Okay.
Thanks.
All right. All right. Today I wanted to take you through the structure, just the structure of the market. But now that you know about the way the candles form, I wanted to walk you through what we call the structure of the market. Okay. So the structure of the market, there are a few things when we look at the market structure. There are a few things you need to understand, and that is, I will change this and maybe change it to a higher time frame, like maybe daily. So what that means, it means each candle you see there, it took 1 day to form. Okay, so that even the current candle will not be done until the 24 hours is gone. Yeah. So what I wanted to do was, let me see. These trades we took yesterday, I want to remove them. Oops, sorry. So I just come here and I click on that X over there on the right hand side. Okay, then I click on it again. And then I click on that again. So all the 3 trades I have removed. Those lines, let them not scare you. Those lines are just showing you where the trade started and where it ended. Where it started and where it ended. But there's a way of getting rid of those lines. So you right click, you go to, I think it's called window.
Tom.
Yes.
We'll need a practical class in physically, like at the office one day. Like we can just go outside to the lounge area.
Oh. So okay, this is not okay. I see what you're saying.
I feel like yeah, like I feel like this, yeah, I can understand, but like I would understand more if it was like practical when we're all physically present.
Okay. So you feel a little alone when you are.
I feel like it's like in school, like, you know, when the teacher is constantly there, like, you know, walking around and making sure you're doing the right thing.
All right. So no, that is fine. We'll do that. But in the meantime,
okay,
I also want you to just try and understand. Pretend that I'm there. Pretend that I'm walking around and trying to understand. Of course, if you're not doing what I'm doing, then I wouldn't even know. Okay. But for now, let's pretend that we are all doing the same thing. Yeah. So this is just a normal chart, and I've changed this on the left-hand side. Okay, I think I need to be telling you what I'm doing. Look at my cursor. My cursor is here, and I'm coming here, and I'm clicking on the time frame. So I've just clicked on the daily time frame. Okay, I can click on monthly, weekly, and so on. But I want to look at the daily time frame because there's something I want to show you guys. So on this daily time frame, okay, let me make this bigger. So we can see that the market, okay, you have a call, just 1 second. Dunia, are you getting anxious? Hmm? Okay.
okay.
Okay. All right. So if you look at this is what has been happening the last couple of days. This is today, this is yesterday, the day before, and so on and so on and so on. So if you look, let's say in the last 7 days, let's say 1, 2, 3, 4, 5, 6, 7, 8, 9. In the last 9 days, we can say the market has been going up. Even though it went up, it came down. Now it's going up. It has gone higher than before. Okay. So it might go up and then go down and then go up again. Usually it would probably go back to the last high. This is the last high, somewhere around there. See this on the right-hand side. On the right-hand side, this line here, this is called horizontal line. This is trend line. This is vertical line. So if I click on this horizontal line, it'll show me where the market reached the highest, around there. Okay. So the market never does something new. It always just copies what it has done previously, which means that this market has come down. Okay. It's very likely if it's starting to go up, it might end up going back up to that place again. Okay. Now, this is good news for many people, but can also be very boring because you know where it is. It's there. So imekuja chini, 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 and then now it's starting to go up. It's going up. Chances are it will continue going up, then go down, then go all the way up to here, up there again. Okay, that's the nature of the market. It always does what it has done before. The only thing is, at this point, we don't know when it will reach there, but what we know is it came down here. Okay, now it is more likely to go up like that, back up. Now, if it had been lower than this point, point X, sometime in the recent future, then it might even come back and go down, but it's very unlikely. So what we want to do now is just to look at the structure to try and understand, let's say if you are going to put a trade, what should we follow? So we always try and follow what the market has done before. Okay, so I will clear this. And then there is what we call support and resistance. So if this is a roof, let's pretend this is a roof. Okay, and let's pretend this is a floor. Now in Forex, the floor always provides what we call support. Okay, so you can stand here. That is the support. So if there's a line there, then there is support. The support makes sure that you don't fall down. Similarly, if this is up here, this becomes a roof. So the roofs make sure that you don't go up. Okay, so sometimes this, this is what we call support. So somebody draws a line down there and the line is below a particular point, we call it a support line. Okay, but if the line, if the market is going up and there's like a roof over there, we call this resistance line. So that is resistance. Now, the amazing thing is usually the resistance line will make sure that the market doesn't go up unless it keeps pounding on it. So like now, it hit here, but it came down. Then it tried again, it hit it, it went down. Tried again, it hit it, it went down. So as it goes down, this time it will come with a little more force. So it's gonna come back, but it's very likely that maybe the fourth time, it might actually just break it. All right, so it might break the resistance. Once it breaks the resistance, this is the funny thing, the market is very stupid. It will always come back and check what it has done, you know, the break. It will come back and check it again. And if, okay, when it comes back this time it is not a resistance, it actually becomes a support. So more often it will stop it from going down. So it comes, tests it, and then go. And this by itself is a strategy that you will learn at some point. So when you have support and resistance, and the market breaks a particular support, let's say it's been coming, hits it one time, again comes second time, then third time. If it breaks, it will break, then it will come back and test it, and then now continue. Okay, so this strategy is called a break and retest strategy. So in Forex, sometimes you'll hear people saying, oh, I only trade in my strategy, the break and retest. So the people who just sit and wait, and you know, when they see this happening, okay, they get.
Sorry, say it again. It's called break and
retest.
Oh, and retest. Okay.
So there are many people, that's all they do. They don't do anything else, they just wait for a break and retest the strategy by itself. All right. So that when the market comes to this point again, they know that it will test it, but this time it will not break and go up. Okay. This place that was a support now becomes a resistance. And so they put their sell order there. So you've heard of us putting pending orders. Yes. So when the market has come down and now it's going up, so what he does, or they do, they put a sell limit. So the limit means the market will come up, but I don't want it to go beyond there. I want it to actually, enter and come down with, I want it to actually sell, but I'll only sell when it reaches here. So that's why it's called a sell limit. So all this will be automated because you're given instructions that when the market reaches there, sell. Okay. So anyway, we will talk about the strategy later, but for now, I want to.
Can I ask a question?
Yes.
Like, if in the event that my analysis is that I decide to put a limit at, you see, between the arrows, you've put 0.1, you see where the market has gone really down.
Yeah.
So if I put, instead of where it's sharp going up, I put in the middle, go up the arrow, no? There. Like in the middle, there's no, yes. Okay, but not in the line. What happens? Like in the middle of that there.
Yeah, if you put, you see, this is actually a virtual line. It's not like a real line.
Okay.
Yeah.
Okay.
We're just drawing it so it is, So if you put your trade here, well, the market will still go up. Okay. If you had put you put your trade here, now if it is a sell limit, okay, unfortunately it will trigger your trade. Okay, and instead of, for a while, your trade will go to the negative because this is going up, going up, going up. Then it will start coming down, coming down. So your trade will start, trigger, and it will start becoming negative, negative, negative. Why? Because you took a sell trade, but the market is going up. And remember, when the market is going up, we don't sell, we buy. So for that moment, go up, and then it will start coming down slowly, 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 until it gets back to where you had put the trade. So then from here now, it becomes positive. Yeah. From there, it becomes positive. But while it was going up, it was negative.
But you can do like an instant, you buy and then you get out.
Yes.
That way you earn.
Yes, you can buy and get out. But if that is the case, you should have bought when it turned down here, because you knew it was going to come back and test this. So you should have bought here. Buy low. Remember, we always buy low. Okay. And then you get out up there. So remember, with time, you'll also learn your own strategy. That's the beauty of the market. Gives you a chance to learn your own strategy.
Okay.
All right. So let me go back to actually what I was trying to explain. What I was trying to explain was support resistance. So support resistance are lines that allow you to follow what's happening in the market. So, and you draw the support resistance using these lines on your right-hand side. Okay. If you see the right-hand side on the last wall here, right here. Okay. So this particular icon, that gives you a chance to pick up your horizontal lines, or even, okay, if there was like a trend line here. So I'm going to use them. First, I'm going to make this smaller. Okay, there. So as you can see, there are so many. I think I better, yeah, from there. So with that, now what I want to do, I want to draw support resistance lines. But how do we draw them? Well, some people draw them by changing these candles into lines. Others prefer to keep the candles. It doesn't matter. The point is, the only way to draw these things, well, not the only way, but the best way to draw them is where you mark where the market has turned. where the market has actually made like a sharp turn. So for example, if this was the highest, I think, let me see if I can. Okay, all right, so this one here, let's start from the middle where this is high here. So I think the height is somewhere there. That's the highest we have. Then anytime the market turned, so it came from there. Let's look at the next, the lowest. Okay, the lowest place was there. Okay, I know this is not the right way, but I mean, there's no perfect way. We just keep marking where the market stands. So it was from there, it comes down, and then it turns again from there as it goes up. And then from there, it turns again. So you can keep marking this and can become too many. You can end up having too many lines. And that's why I will not mark too many. I'll just mark like the, let me say the major ones, major turns. So like here, the market was going up, 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 up until there. And then it comes down. Okay. So here again, I can mark it. I can mark this one here. So the market respected this position and that position. Okay. Let me see. You can mark some more. So as you can see, I'm only marking where the market turned, significant places where the market turned. Okay. There is no worry. They don't have to be like perfect, 100% perfect. It is just a quick and rough way of saying, okay, the market, when it was coming from this side, from the left, going to the right, it turned here, it went down, turned there, it went. So if you look, you can almost talk somebody through what the market was doing. Okay, let's pretend we started from here, from point X. Okay, you can see the market went down, 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 down. It broke that up to here. And then on this support line, it bounced back, it came back up to here. Okay, then bounced back up to somewhere there, it passed it, went up. Okay, it was playing around there, then went back, past this resistance all the way up. But because of this here, it went down, bounced here, it went up. Okay, so this support resistance lines almost tell you where the market is going to go next. Okay, it was there. So I know that when it's here, it can only go up there or it can go down where it came from. And sure enough, it did. It went back to where it came from. Okay, and so it goes up again, comes down. From there, it goes up again, all the way up, and then comes down. In fact, there is another strategy. Okay, again, we keep talking about these things, so you know how interesting Forex is. So when you are here, the Forex market, you know where it came from. It came from up here. So it can either do one of two things. It can either go back, or it can go down. In this case, it chose to go up. Okay, so the market does one of, I would say, three things. It can go back up, mahali ilitoka, juu, or it can play around, hover around there before it makes a decision whether to go back up or go down. And the third option it does is it goes down. So if you are trading, you only have three options: 1, 2, 3. In the case of 2, there's nothing to do because it's not going, it's just playing around there. In the case of 1, you buy. In the case of 3, you sell. All right. So there is a strategy, and I used to love it a lot. It's called a sniper strategy. And I'll show you that some other time. So if you remember it, that'll be good. Sniper. Now, a sniper is like, if you've heard of these wars and so on, a sniper is a person who doesn't move. He just sits at one point with a big rifle or something, and he waits for his enemies, waits for his target, and shoots when the target is in sight. Okay, so he doesn't go around up and down looking for, their target now. So similarly, in Forex, there's a strategy in scalping called sniper strategy, which allows you to just sit somewhere and say, I'm not doing anything. If this market comes, I'm putting a pending buy here, okay? Or if it goes down here, I'm putting a sell there. So I don't really care whether it goes up or down. Whichever way it goes, I will make some money because I'm either buying or I'm selling. That's it. Okay. So there'll be all those strategies as we go on. But for now, I was just trying to show you that when you mark the charts, your support and resistance, those support and resistance lines help you. They help you to try and figure out what's going to happen to the market. And you can draw them anytime. You can draw any. Now, some people prefer to draw them like this. Now, let me look now 4 hour. That was daily. I will look at the 4 hour. Okay. So this is 4 hour chart, which is different from, different from the daily. So I can remove all these lines. Okay. There is usually, okay, viewing options. So I can, oh, by the way, this deal thing, let me show you what it was. These maps that were here, these little lines that were there, you can remove them by going to, let me see. Okay. Okay, you see those lines? I want to remove those lines, these lines here. So I come here and right click, and then I come to view options, and then I click on the deal map. If I click on the deal map, those lines will disappear. Okay, there I have unchecked. So now they are not there. Okay, deal maps. All right, these lines, you can either just right click and remove them, or there should be another quicker way of removing all of them. Okay, I don't like indicators, view options, chart type, templates. Okay, I'll figure out. There's a way in which you can just remove all of them at the same time. And because I don't use this chart much, I think I've forgotten how you remove them. But anyway, that'll be a good one to investigate. Target, sweep trade, grid. Anyway, there's a way in which you can remove all of them at the same time. All right. So, but I didn't want this. I wanted I'm just going to delete them one by one. So you can also highlight and delete, highlight, press delete, highlight, delete. Okay, like that. All right. So we're here, and I want to draw again other support and resistance lines. Now I'll show you a second way. The other way is people come and they say they don't want to use the lines, the candles. So they use some lines. So the lines means you come here. You see where my cursor is? Right here. And then you click on the line chart right there. Right now we are at the bar chart, but if you click on the line chart, all this will become just a line, a line, a line, a line. So like a line that goes like that, up, then down, then up. Okay. So let me see, right there, line chart, there. And then you do the same thing. Okay, you draw your lines like that. But I think I want to change the colors of those lines so they're brighter. Okay. So everywhere where the line turns, you draw a line. Okay. You can draw that. So why do we draw these lines? So they can help you initially when you're still learning how to trade. They can help you or guide you on how to take your trades. Okay. Now that should be enough. If I want, I can still go down deeper. I can put a line there. I can put a line there. I can put a line there. I think this is okay here because the line touches this and touches that. So you always put those lines where the market has touched a particular point. The more, the merrier. So like this is a good line because the market has touched somewhere around there, somewhere around there, somewhere around there, somewhere around there. So you can count them. There are so many. Okay. This is a good one also. The market has touched that point. Okay, now just touch the point up there. Just touch the point there, there. So the more points the market touches, the better that position. So that is support and resistance. Is it hard to draw? No, you've just seen us draw them easily. If you don't like this line here, you come back and you click on your bar chart. So not bar chart, sorry, candlesticks. Okay. All right. And again, how do you use this support resistance? Well, so this is a higher time frame. This is 4 hours. After setting it up on 4 hours, I drop down at least 1 or 2 time frames lower. Okay. So I drop down to like maybe 1 hour. That was 4 hours, but now at 1 hour, those lines will still be there. There. But now it's easier to trade it. See, those lines are still there, but now you are on the 1 hour time frame, and you know that yes, the market has come here, and let's say it's going up. So it gives you many opportunities to trade. So it goes up, and then it comes down. But you know the market is actually going up that way. So every time it comes down, then you buy. It goes up, comes down, you buy. It goes up, comes down, you buy. It goes up, 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 take profit, you get out. See, it has broken this, it's coming back, it is retesting it. So if it reaches here, it might start going up again. So you put your buy here, okay, and you keep going up again. So it's a matter of playing, not playing, but testing. Testing this.
Tom,
Yes.
just another practical example.
Mm.
Let's say at 21 hours, I decide to set a limit at 1.1049 at 2100 hours.
Yes.
So what happens, because you see the market has
Like
gone
this.
down, but I've set myself there in the middle.
Yeah.
So does it mean, yes, does it mean that I've gotten a loss?
No, you're not in the trade. You've just said it right now, which means that when the market comes back and hits this, it'll take you up with it. If it's going up, it'll take you up with it.
No, I'm saying, you see you see the x-axis.
Yes.
There's 16th of March.
Oh,
and then there's
11:00.
Yes. So 21:00. And then on the y-axis, I choose 1.1058. So you see where it is.
Yes, right.
But
here.
then it's at 2100 hours. So come to 2100 hours.
Yes.
Yes.
Right.
So there. So it's supposed to be the market is at that point, but then I've chosen something higher. Means I lose, right?
No, it doesn't mean you lose. It means if this was the time, and you've put a buy limit up on, you'll go make around 50.
10.
Yeah, right here.
No, 1.1049.
Okay, 49 iko chini hapo.
Yes.
Okay.
So ukiangalia
now-
hapo unaona ni